Ahead of the holiday shortened trading week, futures take a look. A bit of a mixed picture. We discussed it a little bit earlier, but right now you're looking at the Dow off about 40 points, though the S&P 500 is higher. That's hardly, though, I should say, 2.5 points higher. The NASDAQ up about 46 points. Want to talk markets, some stocks to watch. Stephanie Link, Chief Investment Strategist, Portfolio Manager at Hightower Advisors, as well as a CNBC contributor. She has her Christmas spirit on. She's basically wearing it on the air, Stephanie. However, as I said, the Grinch came early, and the question is there any chance of a Santa Claus rally come Wednesday?
Well, we are up 24%, Andrew, year to date. So we've had a really good year.
I'm very short term right now. It's early.
It sounds like it. But I want to keep it into perspective. We were up 26% last year, 24% this year. I actually think we could rally into the end of the year. And I think the winners are going to continue to win into the end of the year because you have portfolio managers that are underperforming their benchmarks, and they're going to just try to catch up. And I think the losers probably continue to lose, too, on tax loss harvesting. And so that theme has been kind of playing itself out in the month of December, right? The Mag 7 have really been the leaders. Technology have been the leaders, and just about everything else has not really kept up. But I do think you are going to see into 25 maybe a little bit more broadening out. Look, I mean, I know last week was wild with regards to Powell commentary, hawkishness, the close call of the cut that they just did. All of that was not great, and it led to uncertainty. It's the reason why the market pulled back. But one thing we did learn, we learned that they're focused on not only labor market, which is fine, but they're also focused on inflation. And the PCE, the core PCE number on Friday was okay. It's still high at 2.8, but it could have been a lot worse. And so that's why I think we're all kind of breathing a sigh of relief. And in addition, if you look at some of the other data that came out on Friday, personal income, personal spending, wages, all of that were up north of 5%. And that's good news for the consumer, which is 75% of GDP. So you add this all up, I do think you're going to see the Santa Claus rally. And even if we don't, can't complain about 24%.
Tell me what you think is really 25 portends, meaning if we're having this conversation a year from now.
Yeah, I think you're probably going to see not 3% GDP growth, but maybe something like 2.5%. But that is still pretty supportive of something like 8 to 10% earnings growth. And that's really what I care about as an investor. I think inflation is going to come down eventually as growth slows. So I've been in the camp that the reason inflation has been high or elevated is because we've seen above average growth. We're running at 3.2% GDP growth right now on top of 3.4 last year. So I don't think you're going to see that momentum continue at that pace because we just don't have that fiscal spend. But I do think you are going to see above trend growth given Trump's pro-growth policies, deregulation, lower tax cuts. So all of that up, I think, yeah, earnings running about 8 to 10%. I think that's pretty supportive of a broadening out in the market, not just a Mag 7, but I still like Mag 7 too.
Okay, so but outside of Mag 7, give us some names that you like.
Okay, so, I mean, I would include Mag 7 and maybe Mag 8 if you put in Broadcom, right? I mean, the stock's up 97% year to date. It pales into comparison to NVIDIA, which is up 172%. But this company just told you that their custom chips, they are actually increasing their customer base there from 3 to 5. That AI service addressable market is something like 60 to 90 billion by 2027. That's 3 to 4 times as large as today. And they have earnings power of something like $11 to $12 a share. If you believe that, the stock's trading at 21 times. And I know it's had a heck of a run, but I do believe it will continue. Outside of the Mag 7 and in technology, I like Accenture. Accenture is actually only up 4% year to date, and it too is an AI and cybersecurity play. They just beat, they raised, it has an increase in operating margins. Their Gen AI bookings, Andrew, rose 144% in their quarter, year over year, and their cyber revenues grew double digits. So I think that one plays catch up. So I like some of the names that have momentum, but I also like some of the ones that have mean reversion into 2025, and we can talk about a bunch of other names, too, if you like.
I'll take them. Give some stocking stuffers.
Okay. Stocking stuffers, I love it. Rockwell Automation, that stock is down 6% on the year. And you and I have talked all year long about electrification and the energy transition that we're going to see over the next 2 decades. We're going to spend $4 trillion on electrification and this energy transition and automation between now and 2050. And Rockwell Automation is on the automation side. Their markets are bottoming. It has not participated with like the Eatons and the Quanta Services and the GE Vernovas of the world. But I think it will mean revert. They have a new CFO also who's laser focused on margins and profitability. I like banks. I like Bank of America. I thought Brian Moynihan's commentary on your show a week and a half ago was very encouraging in terms of better growth. They expect to see a little bit better loan growth, and deregulation will help M&A and activity. And I do think net interest income with the steeper yield curve will be the 2025 story. And these guys have about 60% of their revenues is that. So, and then also we get Basel III Endgame, which is the capital rules, as you know. I think they're going to be less restrictive. And Brian Moynihan is on record saying, I'm going to buy $20 billion of stock once we figure out what those rules are. And the stock trades at about 1.3 times book. And then finally, I like the Gap. Because I do think it's a special situation turnaround story with the CEO, Richard Dixon, bringing in new management. They're gaining market share in Athleta to Nike, in my opinion. They have had 4 quarters in a row of better revenue growth, 7 quarters of market share growth. They're going to generate $500 million in free cash flow. Stocks are trading at 13 times earnings. So I like that one for 2025.